Hello, 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 hello. Hi all and welcome to another edition of a midday market review. My name is Phil. Hi and welcome to our pre-US Open session. As I said, we'll be discussing some live trading. We'll be discussing some key trading levels and also some trading setups for few popular markets. I'll just tell you basically what I'm looking at, and if that's of any benefit to you, excellent. I'm really happy with that. A little bit about me. My name is Phil. I'm a founder of TraderCast. That's where our community is. I'm also a head tutor at My Trading Skills. This is where you go to find education. I've been initially investing in stocks and shares in mid to late 90s, and at that time you would call your broker on the phone, and it was more an investing, buy and hold stuff rather than trading. But I started trading more seriously from late 1990s, early 2000s, when derivatives became quite popular, and I was exposed to trading on margin. So I've been doing that pretty much full time since 2004. I'm also providing trading education, and I'm also a technical a market analyst, or market analyst if you want to call it. I do write a content as well. So that's me. And for those of you who haven't seen me before, yet again, I'm showing you a few of these slides, not to make myself look quite important, but over the past 10 years or so, I had the privilege to talk in front of thousands of different people, and we taught some of them to trade, and some were brand new people, never traded before, and they wanted to find the basics, first steps, and some of them were actually quite experienced and they needed help with a specific area of their trading. So that's me. Big disclaimer before we start talking about anything. These are my opinions and experiences. This should not be taken in consideration as an advice. I do not have indication of your personal investment and trading objectives. So therefore, anything I say here is for the proof of concept of what we are teaching you in our courses, and also for the educational element of that. Now, before we go and do anything else, I want to show you what I have currently open. Last week we had a really volatile week, really volatile week. The week ended up with non-farm payrolls. I had a number of really good trades open, really happy with that. I got stopped out on a few as well, which is fine. I took some partial profit. You can see the WTI crude here. It's still open, but I took some partial profits at the levels that we were talking about last week. I'll talk about it in more detail as well. But currently, I am long S&P 500 at 45.31. Got that fill in. Really happy with that trade. Tight stop. Let's see how that plays out. I still have 1/3 of my position open from 64.42. I took partial profits before. My new trade in gold, I am currently a long gold at 17.75. Yet again, we talked about that level over and over again. I was waiting for the breakout. That happened. I'm still short euro dollar at 113.36. I'm also short euro dollar and short sterling dollar at 133.18. And I am out of my yen trade. I no longer have long dollar yen. So that's all closed. And I'll be looking at some levels for you in a minute. Now, let's talk about a few things which are currently happening in the market. This is going to be fast and furious. So first thing that I wanted to talk to you about was S&P, and that's fairly straightforward. Really happy with this trade. Decided to go long. There's a number of reasons. These kind of multiple layers of evidence that we are pointing to. The level that I was looking to go long at is at 45.31. Yet again, for those of you who are going through the courses, just by looking at this chart, and there's no indicators or anything, you know the reasons why I did that. You can also read this price action here. and you know the reason why I did it as well. So I decided to go long at 45.31. The stop is initially below, and I'm looking for a push higher towards this zone here. So high, lower high, lower high projected. This is also a 61.8 fib from here to here. This is also 32%, 38.2 fib, and this is also 38.2. So there's a cluster of fib retracements there as well. I can show you, apart from the horizontal, some moving averages there and also trend lines. So this is a really sweet spot for me. I'm really happy with that zone. 45.80, 45.82, all the way up to 45.90. So from the risk to reward ratio point of view, this really makes sense. So let me just show you what I'm talking about. So for this amount of risk, we're looking at 1, 2, 3, 4, 5, almost 5 to 1 risk to reward ratio. These are the setups that I really like. Disproportionate amount of potential gain for much smaller and very definite amount of risk taken on any one trade. This is 1 hourly and we are in 15 minutes, and this looks really sweet. Look, it looks really sweet. So you have nice bullish engulfing here, and now we're looking for more upside. So let me just show you that trade. Sorry, I didn't check if we are open, up and running there. Just hold on a sec. Okay. Just changing the time frame so that you can see the trade and also where the stop is and the rest. So here we go. So that's the trade. A fairly logical reason to get in. We had sideways overnight pullback, and now we are bouncing higher. So the initial stop is down here, about 7.5, or call it under 8 points of risk from the entry, and the limit was at 45.80. So this would be the limit, and then 45.95 on the upside. So these two, so risk, it's 8 to 1 risk to reward ratio. So that's really good. I would very likely be looking to take partial profits here at 45.71 halves. So if I see a push in here, partial profit taking on this trade. Stop will be moved at break even. Actually, I can move the stop at break even and slightly above now. So I'm gonna move that. So I'm locking in about 6 points on this trade, just in case. So and then if I see a breakout of this level 45.70, possibly a retest from above, I'll be looking to move my stop higher towards 45.50, and I'll be looking to take partial profits at 45.80, 45.82, and if I see a breakout above that, the last part of the trade will be closed at 45.95. So I will be really happy. At the same time, I'll be moving my stop along the way. Just to make sure that I'm protected all the time. So that's where I am with S&P at the moment. So it's exactly the same thing as what we were talking about here. So the other thing that I'm currently long is I'm currently long gold at 1775. So these annotations are from Friday. Just bear with me a second. I'll do this. So if you remember, we were talking about 1775 last week on a number of occasions. Decided to go long. I wouldn't like to see the loss of 1760. So that it's a big dip below this rising trend line. Daily close below 1765, 1760 would definitely spook me, and I would likely get out of this. But I'm looking for a push towards 1800, 1808, 1810, 1814 on the upside on this trade. So from the risk to reward ratio point of view, yet again, it's a decent enough risk to reward ratio point of view. Not the best, but decent enough. Okay, I like to trade these very often. So if I see these type of patterns and I see a nice breakout on the upside, I might be looking to add to my position again. I might be looking to add to my position, and then in that case the take profit would be at 1786 for the second half. If I'm more speculative, I might be looking to do something like this, 1791. So a number of profit taking areas here, clusters of the previous highs, lows, also here we go, 61.8 fib. So I don't mean to be confusing some of you. I know some of you are brand new, or some of you haven't seen this before. I don't necessarily want to be confusing you, but if you're looking for the detailed explanation why I'm doing certain things, and you need a little bit of help with your education, feel free, come in, say hi, and drop in and see us as well. So let me see, this is all, yeah, so we are all good. I don't mean, yeah, I was just checking that we are up and running, that's all. Apologies. So let me show you that trade as well, very quickly. There we go. That's our gold. At 1775 entry. Small. It's a 5 contract trade. It's only making about 27, 28 euros or something on this trade at the moment. But it's looking good so far, and I would like to see a push above, break above, and then potentially move higher. Otherwise, if I see a selling pressure, loss of 1770, I would likely look to close this trade. It's about I would be willing to risk about, you know, five points. Sorry, $5 in price. Let's say $5 in price, because some of you are trading futures, some of you are trading spread, some of you are trading CFDs, some of you are trading margin forex trading. Sorry, and I know you can't really see this, but let me just make sure you can. So $5 in price could be 5 points for somebody, like if you're trading in the way that I trade, or it could be 50 points, depending on how much leverage and margin you're taking and so on. But basically that's what it is. So 1770 would be the risk for the potential push higher towards 1800. So about $15 in price for a potential gain for $5 in price of risk. So that's where I am with gold. Okay, cool. The other thing that I also have open very quickly is crude oil. I am currently long crude oil off this bounce higher, and if you remember, we were talking about a pullback to 67, this area here, 67.70 from the intraday point of view. And if you remember, I was saying if I see a big flush lower, I would likely be closing part of my position and so on, and I'll get out and so on. So I did that, and then I did another position taken from about 67.50, 67.60 in that region, which is this bounce here, and then I kept the last position open for the time being, because I'm still happy to hold it. So the reason why I did all of that is because I feel that we could see a little bit more to the upside, and then a break towards 70, possibly even higher. So let me just show you where I am with that. So I had a large 10 contract position on this one. So you'll see that this is now only three contracts long. Sorry guys, I'll get better with these charts. I need to figure them out. So that's where the entry is at 60. Sorry, you're seeing it here. 64.40. When we saw this spike higher, if you remember, I was looking at 67.70, 67.70. That was a rising trend line. So when this eventually happened, I got out. I took 3 contracts out of this trade. That left me with 7. So when I saw this further selling pressure, I decided to get out again. So previous highs, previous highs, previous lows, get out again. Another 4 contracts at that time, and I left the 3 contracts running. So that's where we are at the moment. So we are in the money, and the initial stop was below, and now the stop is at 65.20. So what I'm saying is that I think this can go higher. I would probably have a mental stop. So if I see a loss of 67 to the downside, so this clusters of lows, I would close this position. But if that happens while I'm away from the desk or while I'm asleep, I still want to lock in some profits here, because I feel that potentially we could have more to the upside. So limit order is loose towards 70, but currently I'm locking in this stop to the downside as well. The other thing that I currently have open is my euro dollar. So euro dollar, I'm still short euro dollar. I'll show you that very quickly. A number of reasons why that's still a valid trade. Just change the time frame. Okay, here we go. So that's euro dollar. So we are about okay, so that's euro dollar, falling trend line here, and now I'm looking for more downside. The initial stop was above the entry. The stop is now below, so I'm going to move the stop slightly lower at 113.50. 113.50 is the stop, so locking in about 17 points, but I'm keeping it open. I think we could see more to the downside, especially if I see the loss of this 112.60. I would think that this can go towards 112.40, 112.20, possibly even 112 to the downside. That's where I would like to take profit, but there was no reason for me to change this position. I'm still shorting euro dollar. The longer term trend is clearly intact. Clearly intact, and there we go. Don't want to talk about multiple reasons why I did trade there and why the stop was above and why I think that good take profit would be down here. It's very obvious. This is textbook scenario. Look, textbook scenario. Oversold bounce back, loss of support, retest, falling resistance, trend line, and so on. All the good stuff that we are talking in our courses and also in our community on daily basis. The last thing that I have open is cable sterling dollar, this one here. Apologies, didn't mean to do that. So sterling dollar, last thing that I have open is this. Yet again, clearly defined reason why this would be a short setup or a good short setup, and from the shorter term point of view, the major support is now forming down here, and the resistance on the upside is up here, the cluster of these previous highs and so on and so on. So from the trade point of view, I'm still happy with that one, and I'll show you where I am with that. So this is cable. Here we are. Sterling dollar, short setup, flush lower, oversold bounce, high, lower high, lower high, lower high, lower high, lower high, lower high. Yes, quite happy with that. The stop is currently at break even, and the limit, okay, the stop is currently at break even, and the limit order is down here, these kind of lows, 113.20. That's what the limit order is. So in the money here, happy with this trade, wouldn't change anything. I'll move the stop loss maybe a little bit below entry, just to kind of there we go, just to justify some profit here, just in the case, about 17 points. Let's do that, but I'm going to leave it. I'm going to leave this as an open trade. This is a swing type trade, and then off we go. So that's me with my trades for today. I'll be looking at some more trades in Nasdaq a little bit later on. In a few minutes I'll be starting the broadcast in the community. Also, there was a huge amount of volatility in cryptos over the weekend, so exciting time from the economic data. Quite a week, but it doesn't necessarily mean that it might not be as volatile as the last one. Thank you for watching, thank you for listening, stay safe, happy trading, and bye for now.